our learners. Welcome to this beautiful session of ours, a continuation of what you are doing earlier on. Recall in the previous session, we introduced the concept of cash budget, which is amongst our non-production budget. So today's session, I want us to look at a question which will enable us to understand this concept very clearly. And the question that we are going to handle, I'm going to share with us here so that you can have it. This is a question. You'll find that just as we had mentioned earlier on, anytime you're talking of cash budget is always a simple concept, so long as you are able to master some of the key areas, like you know very well that anything that is going to be kind of considered in our cash budget, basically, this should be in cash form. So that is to say, any expenses which are non-cash, they will not be considered in our cash budget. Like, say, for example, depreciation. Depreciation is an non-cash item, so therefore it won't be considered in our cash budget. So looking at that question, these are what you are told, that the following information was extracted from the books of Himara Limited from the forecast made for the last 5 months of the year ended at 1st December 2018. I'm given our month, August, September, October, November, December, and you have our sales, purchases, overheads, depreciation, as well as wages. Look at our additional information. The examiner was clear. He told us that all purchases are on credit and suppliers are paid 2 months after the date of transaction. So therefore, my payments, our outflow is being done after 2 months after the month of transaction. Then note 2, you are told that 25% of sales are on credit. 25% of the sales are on credit. Debtors are expected to settle their accounts the month after which sales took place. So 25% of the sales are on credit, meaning that 75% are on cash, whereas the debtors, these are sales on credit, debtors are expected to settle their account the month after which sales took place. So that should be the next month, right? Wages are paid in cash as they become due. Note 4, the bank balance on 1st October 18 was estimated to be 3.6. Overheads are paid at in the month which they are incurred. Depreciation expense is included in the overheads provided above. So cash budget for the month, for the fourth quarter, showing the months of October, November, December 2018. So my good students, that's the question that you are given, and it's upon us now to work it out. So given such a question, believe me that you've taken a screenshot. Still, I'll try as much as I can to squeeze it somewhere below here. So that is our question, which we are supposed to solve it, right? So recall, first of all, the format of our cash budget. That is one thing that should click at the back of our mind always. The other thing that you should be able to focus on is to consider our aspect to do with cash inflows and cash outflows. So first thing first, at this point, I know very well we need to prepare our cash budget. So I need to ask myself, what are our receipts in terms of the sales? How much do you collected in form of cash? In form of cash, that is in relation to what? In relation to our sales. So that should take us straight to working number 1. Let's just serve it as working number 1. At this point, I want to compute what? We want to compute our sales receipts. We want to compute our sales receipts to determine how much will we be collecting in form of our sales, the cash that of course we've kind of sold. So in this case, I'm having how many months were we given there? In that case, you can clearly see I was given the month of August, September, October, November, December. So I'm having August, September, August, September, October, November, and December. And this time around, my figures I'm given in thousands of shillings. So I'm having in thousands of shillings. I'm having thousand. So remember, this is also one way of forecasting. These are also part of forecasting. That's why we're talking of budgeting. It's something that should occur in future. It hasn't yet occurred, right? So in this case, talk of our total sales. So talk of our total sales. So total sales Total sales in the month of August, we had 42,000. So I'm having 42,000. September, you can clearly see we had 26,000. October, I'm having 28,000. November, I'm having 32,000. December, we are having 38,000. So these were our total sales. These were our total sales. I'm not interested with the sales that we made. I'm interested with the cash that we collected. So therefore, consider the cash that we collected here. So we start with what? We start by considering, of course, the cash that we collected. So talk of our cash collection. So talk of our cash collection. Cash collection. First of all, I'm having 75%. The first 75%, because if you can check note number 2, we are told that 75% of the sales are on credit. So 25% of sales are on credit. If 25% are on credit, that is to say the remaining balance, which is 100 minus 25, were on aspect of, that is 25% of our sales were on credit. That is to say the remaining 75% was in cash. So these are what you're going to do. So you need to consider our cash collection, so cash sales. So cash sales, we are talking of 75%. That is to say that I should be talking of August, 42,000 by 0.75, which should give us 31,500. 31,500. In September, 26,000 times 0.75, that should give us 19,500. 19,500. 28,000 times 0.75, that should give us 21,000. November, 32,000 by 0.75, that should give us 24,000. And finally, 38,000 by 0.75, that should give us 28,500. So that is our cash collected. Cash collection. These are our cash sales. These were our cash sales. Then what about 25%, the credit that remained? What were we told? Look at that note. 2 still. We are told that 25% of the sales are on credit. Debtors are expected to settle their accounts the month after which sales took place. So my good thing, that is to say 25%, the remaining balance to be collected. These were the credit sales to be collected, which is 25%. I'll be collecting it 1 month after the month of sales. So that is to say the remaining 25% of August, we are going to collect it in the month of September, which is 10,500. 25% of September, I'm going to collect it in October, which is 6,500. I'm talking of 25% of what? 26,000. Whereas in November, the same case will apply 25% of the sales in October, which is 28,000. I'm going to have 7,000. Then in November, I'm having 25% times 32,000, which should give us 8,000. So in that case, we've collected. These are our collections. These are our collections. So having that, confidently, I can come and determine our cash now. These are total cash collection. Total cash collection. Total cash collection, therefore, I should be talking of in the month of September, 19,500 plus 10,500, which should give us 3,000. October, I'm having 21,000. This should give us 30,000, right? October, I'm having 21,000 plus 6,500. This should give us 27,500. 24,000 plus 7,000. This should give us 31,000. 28,500 plus 8,000. This should give us 36,500. So these are our collections. And that is where our focus should be. That is where our focus should be. That is where our forecast should be. That is where our forecast should be. Now, once we have determined that, the other key area to consider, that is if we were to talk of note number 2, we are done with that. Wages are paid in cash as they become due. All purchases are on credit and suppliers are paid 2 months after the date of transaction. That is note 1. So we need to consider the payments to our suppliers. So term it as working number 2. Our focus is to consider payments to our suppliers. So payments to our suppliers. So the same case, we have to consider our period. That is August, September, October, November, as well as December. Our figures still are in thousands, or what are we given? Yeah, for purchases we're also given in thousands. So I'm having our figures also in thousands here. In thousands, in thousands, thousands, thousands. So basically this is what we do have. This is what we do have. This is what we do have. So having this case, considering our purchases. So first thing first, total purchases. Total purchases. We are given our total purchases. We just copy paste the way it is. And if you can check there in our question, our total purchases at that point, we had a figure of, that is of course 24,000. September we had 25,000. October we had 14,000. 14,000. November we had 16,000 and 18,000. So these were our purchases. But remember, we are paying these purchases 2 months after the month of transaction, 2 months after the month of transaction. So therefore, what will you consider? I'll put the question on top there so that you work it out correctly. Now, talk of our payments. Payments, I'm doing it after 2 months. So that is to say, the payments in August, which is 24,000, I'm going to make the payments in the month of October, 24,000. Payments for September, I'm going to make such payments when? In November, which is 25,000. As well as payments for October, I'm going to make these payments, that is of course payments for October, we are going to make them in the month of December, which is 14,000. So this is when our cash outflow is being done. So these are where we're having our cash outflow. Because remember, the whole concept of cash budget, basically, our focus basically is on inflow and outflow. Cash inflow and cash outflow. So looking at that case, considering any other statement that we require working, if we can focus on note 3, wages were paid as in the same month. Overheads paid in the month in which they are incurred. Then note 6 is there was a catch in note 6. We are told that depreciation expense is included in the overheads provided above. So whatever that was given above as overheads, it had a component of depreciation. And recall, depreciation is an uncash item. So therefore, what do we need to do? We need to deduct that depreciation. So working number 3, we want to compute our overheads. Always have in mind that anytime we are talking of depreciation, will always be an uncash item, so therefore it won't affect our cash budget. So for overheads, in this case, the figure that I was given here, 4,000, actually my focus is on 3 months, that is October, November, and December. So October we had 3,600, total 3,600, 3,400, as well as 3,800. Deduct, these are our total overheads, these are our total OHDs. I want us to deduct depreciation because depreciation is an uncash item. Depreciation was given 320, as well as 320. So my good student, that is to say, at this point, if I was to talk of the overheads that we paid in cash, what will we be having? I should be having the I should be talking of 3,600 minus 320 to give us 3280. So I'm having 3280. 3,400 minus 320 to give us 3080. And lastly, we should be talking of 3,800 minus 320 to give us 3480. So that is what we should have. 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 So basically, we're done with our workings. Now, whatever that has remained is just a matter of us to copy and paste. So first thing first, I want you to mark for me these figures, because they'll be very important for us, so that I can remove the question and you work out our cash budget. Given the fact that note number, that was note number 4. The bank balance on 1st October 18 was estimated to be 3.6. So that will be our opening balance. That will be our opening balance. So, believing that you have marked the question, allow Mwalimu now to prepare our cash budget. So therefore, my cash budget will be, our cash budget for the month of September, or rather for the month of October, November, and December. And our figures here, I'm going to take our figures to be in thousands. I'm going to take our figures here to be in thousands, because that is what you are given. Our figures are in thousands. That is what you are going to work with. So at this point, just recall the format of the cash budget that Mwalimu gave us. The format of cash budget that Mwalimu gave us. So that will be simple, because I'll be considering now here our balance put down. This is cash. Balance put down. I was given that case in note number 4, 3,600. Because our figures are in thousands, I'm going to take 3,600. Consider our receipts, my good students. Consider our receipts. What will we be having as our receipts? So we are talking of our aspect of receipts. Receipts during the period. At this point, we didn't took any form of loan. We didn't kind of received any form of dividends. In this case, we didn't kind of sell any item of a fixed asset. So therefore, I'll just be taking our figures as receipts component. I'll only be taking receipt component to be what? Receipt component, I'm only going to take this figure of ours, which are our sales. So consider our sales receipts. We have calculated it here. Cash collection, that is 27,500. 27,500 for the month of course, October, 31,000 in the month of November, and 36,500 in the month of December. So you didn't have any other form of receipt. If you could be having any other form of receipts, you could have added it here. Maybe loan, for example. Maybe dividends received, for example. Maybe aspect to do with dividends received. Maybe aspect of proceeds on sale of fixed assets. Proceeds on sales of fixed assets. We could be having them at this point. But in this time round, we weren't given such. So that will make our work to be easy. Now, consider our total receipts. If we didn't have such items, consider our total receipts here. So this will be our total receipts. Total receipts. Then, talk of our payments. Now, talk of our payments. Talk of our payments. So payments, we start with the one that we've computed in our workings. Which are payments? In this case, we are starting with what? The aspect to do with the purchases, right? So talk of our purchases. So for purchases, we've computed our figures here. I'm having 24,000. We do have 25,000. We do have 14,000 here. That was 14,000, yeah, 14,000. Then we also had our overheads, which we've worked it out here. So my overheads here, in the month of October, we have 3280. In the month of November, we have 3080. In the month of December, we have 3480. So those are our overheads. Any other component to consider here, my good students? What will you be having? Consider other expenses that you are given. Now, just go to your question and see what we had. See what we had. Like squeezing it there. The only item that has remained is what? Aspect to do with depreciation. Not depreciation per se, but wages, right? Because depreciation is an uncashed item. So you're told that wages you are paying in the month that they were due. So to go for our wages, therefore, my wages, we should be talking of 13,000. Not, we are looking at October, sorry. In October, I'm having 9,600. November, I'm having 12,000. I believe that we are all good. We are all on the same page. We're having 12,000, right? So basically, this is what we should have, so that at the end of the day, my good students, we can determine our total payments. We can determine our total payments. We can now determine our total payments. So no need of this, because already we've displayed it there. So talk of our total payments. In the month of October, I'm having 24,000. We add 3280. We add 9,600. This should give us 36,880. 36,880. In the month of November, I'm having 25,000 plus 3080 plus 12,000. This should give us 40,080. In the month of December, I'm having 14,000 plus 3480 plus 12,000. This should give us 29,480. 29,480. So having this case, these are our total expenses. These are our total expenses. So therefore, as at the end of the day, we can now determine our cash balance. We can determine our cash balance. We can determine our cash balance. We can determine our cash balance. So these are total. These are total payments. Total payments. Now we can determine our cash balance as at the end of the period. So cash balance carried down. So what will you be having? In this case, whatever that I'll be having, in the month of October, consider our total receipts, which is 3,600 plus 27,500. My good students, I'm getting a figure of how much? 31,100. So 31,100 minus 36,880, this should give us 57,80. So 57,80 will be our opening balance in the month of November. So here I'm going to have 57,80. So 57,80 plus 31,000, this should give us a figure of how much? 22,80. 25 to 20. Remember, this is an overdraft, right? That is an overdraft. So that as at the end of the day, minus 40,080, that should give us again an overdraft, or rather 860. So my closing balance in the month of November will be our opening balance in the month of December, 14,860, which in this case I should be having that plus 36,500 to give us a figure of 21,640. So that as at the end of the day, we should be talking of minus 29,480 to give us a figure of 78,40. So basically, this is our cash now, our cash budget. As you can clearly see, so long as you've mastered some specific concepts more so, knowing that whatever that you're going to put in your cash budget, basically, it is specifically aspect to do with what? Cash items. Things will be very, very easy on our side, and you'll always find yourself working out these concepts very, very easily. So to this point, guys, thank you so much, and let us meet in our next session. Thank you.